Welcome back to another episode of the Anomalous Investor. So, we're going to cover a variety of topics today. Obviously, some of the macro events, including the S&P breaking record highs, crypto, pretty much record highs across the board. Bitcoin has been absolutely soaring, Ethereum is running. We're seeing a lot of capital flow back into the market. So, this is going to be a good conversation overall for the markets and kind of getting an idea of what the rest of the year, this last Q3 and Q4 have in store for us. So I want to come out and I want to talk about the market momentum first. It's one of the things that has been driving the market since we've made our recovery basically from the tariff scare that we had around April. And we've seen pretty much the market absolutely tank. And there were some fears going forward as far as for how long this is going to last, whether or not we were going to go into a recession, was this going to trigger a market crash? All these things were out there. And I think the biggest thing that we have to keep in mind here is that, especially with this administration, is the economy and how well the economy is as performs is going to play a big part. And I think the biggest thing for Trump and this administration is it's going to, even though we're roughly 6 7 months into his second term here, how well the stock market, the economy, the real estate market, how well these things perform is definitely still going to be compared to the his first term. Despite the fact that we had a president in between, his these 4 years are going to be compared to the first four, and he knows that. And I think this is one of the reasons we're seeing the back and forth with Jerome Powell and cutting rates and all this kind of good stuff, so that he can ultimately get money cheaper to borrow, and the stock market can pretty much resume pushing forward and put up some of those record numbers. So I think that's something to keep in mind here when you're looking at long-term targets and some of the macro events circling around the micro conversations that are happening right now. Because Jerome Powell, whether or not he can get fired, which I don't think he can. I know he has terms. I believe he has a 4-year term similar to the president, and I think that, and we all know we can go down the rabbit hole here with the Fed and how they technically don't answer to anyone, but I'll save that for another conversation. But we know that they typically just to operate and report the numbers and make the decisions as far as for tightening, loosening, injecting cash, QE. They can do all of that. I want to say without the influence of the president, because if you've read the book The Creature from Jekyll Island, you can go down again, you can go down the rabbit hole as far as for how this was established, but they don't really have to check in. So that's one of the things that I believe is frustrating Trump as well, leading into some of those macro events, is the fact that he can say what he wants, but Powell doesn't have to listen to him, and he can't technically fire him. Because if you remember, if you go back to 2018, let's see if I can pull it up here. You can look on the stock market, and you can see that around the time where Trump was talking about firing Jerome Powell. Let me see if I can pull it up here roughly. But this is not the first time this has happened. He alluded to this in 2018, and you can see the stock market fall off of a cliff around that time. We kind of walked back that statement and we recovered. But you can see very clearly, I'm trying to get a time here. Let me see if I can pull it up. If I can't, then I'm sure you guys can. Because I remember looking at it very vividly, and it was crazy the way that it kind of just fell off of a cliff when he was alluding to that. Let's see. Okay, that's not what I'm looking for. But anyway, I'm almost positive it's in 2018, so you can go look at it for 2018 and look and see that time frame. I don't want to take up too much time on the video here, but it's a very interesting thing here, and people know that this guy here, ultimately, what he says can swing the market, right? So when we're having these conversations and we're looking at that and we're saying, okay, well, what's Trump's agenda for the stock market? What's this administration's agenda for the stock market? And what is Powell kind of aligning with that? Now, obviously, we're still getting bullishness here. We're seeing, I believe we hit 628 today. Let's see, for SPY. Yeah, 628. So we're still pushing forward. But obviously, when you have the events, kind of like when we talk on the channel, micro and macro aligned, you're going to see a stronger push forward. And I think that's what Trump wants, because you'll see a much more aggressive gain here. So like Powell came out and said, hey, all's good. We beat inflation. Everything looks terrific. We're going to cut rates. Money's going to be cheaper to borrow. Interest rates for mortgages because it's coming down. Auto loans, credit cards, everything is fantastic. The run that we're seeing now would pale in comparison between the combination of this administration's policies and the Fed's policies aligning, right? And I believe that's kind of where Trump is trying to get this to go. And I believe ultimately we'll get there sometime in the next 4 years. But I do have this market continuing to be bullish for the rest of the year. I don't see, I'm not saying that there won't be pullbacks or corrections or anything like that, which is normal for a healthy market. But I do believe that we're going to finish the year positive. I don't believe necessarily we're going to slide into a recession right now. I believe that we're going to go ultimately closer. And I believe even for SPY here, I believe that we're going to see SPY possibly even over 700 this year. I wouldn't put it past it as far as for the momentum. So that's something I'm looking forward to as far as for the market and getting an idea of what the next 3 years are going to look like. Because ultimately, if you have an administration that is focusing on gains and wealth for the overall country, you're going to see these injections throughout the economy. You'll see things like with the, I believe all the newborns between now and the end of the presidency are going to get like $1,000 fund. So you're going to see a bunch of capital flow into the markets ultimately. So this is all going to result in us getting pushed up. So we have Apple here still struggling, 210. Let's see, 5 day down $2.23, up $13 for the month, down $12.62 over the last 6 months, and down $33.83 over the year to date. The 1 year 14.16 down for Apple. Oh my God, Apple. So the biggest conversations you've seen on the news, and you've seen a lot of people calling for the firing of Tim Cook and other things. You've seen it's become very popular to say these things to replace Tim Cook as CEO. And ultimately, you have to understand that the capital that's driving the market now is two things. If you're looking at crypto, it's obviously going to be institutional positioning, right? If you're looking at the stock market, and you're looking at the numbers that that Meta, that's where I'm going with this, but Meta, NVIDIA, Microsoft, you're looking at these companies that are actually growing. What are they doing? They're investing heavily in AI. And we all know that you can have the SPY S&P 500, and it's like a collage of these companies that's supposed to represent the economy. But we all know the big movers, and that's why you have things like the Magnificent Seven. We all know the most of those gains come from a few companies. And right now, obviously, NVIDIA becoming one of the most valuable company of all time. I believe peaking over $4 trillion as of within the last 48 hours. We know that this is driving the market. So when you're looking at things and you're looking at things from a macro perspective, you're saying, hey, what do these companies have in common? They're obviously investing in AI and AI heavily. So you look at Apple and it's not getting these gains because you don't see the talk as far as, and the crazy part is Apple has the money. Like it's let me see what Apple's cash on hand is really quickly. But when you see that, you're going to see an issue here where a company that's one of my favorite companies, like the computer I'm using right now, I've had Apple products probably for the last decade plus. I was one of the guys who went and got the iPhone when it first came out and it was limited to AT&T. I've been a Apple person ever since it was introduced, and this is really heartbreaking to see, but it's the truth. Apple has to expand its horizon if it wants to grow and get some of these gains that we're seeing here. I'm not saying that it's the end of the road for Apple or anything, but they certainly have to pretty much tighten up because this is not productive for a company that is known for being revolutionary and growth. And that's another thing we can get into as well, which is Apple has not done anything revolutionary in a very long time. We've gotten away with, and again, I'm still guilty of it. I wouldn't consider myself an Apple loyalist or anything, but I guess I can't. I guess I could say that, but Apple has gotten away with a lot, where a lot of these other companies have been innovating and trying to push forward and um, include these groundbreaking things as far as for like I can compare Meta with it, for example. Like they're willing to invest even if it doesn't necessarily make money. Like with Mark Zuckerberg and Meta with the metaverse, I'm sure you guys remember that. They're willing to invest and take these risks, things that we've seen in the past with like Steve Jobs, where he had a lot of innovation coming out from Apple, and we haven't seen that in a while. We're just getting a 2020. We're getting a better MacBook and a better um, iPhone, slightly better camera, slightly better processor. Boom. 2021, you get the S version, slightly better MacBook, slightly better processor, slightly better camera. Boom. 2022, same thing. 2023, 2024. And at some point, if you're not having that innovation there, you're going to lose customers to not necessarily lose customers. I don't believe necessarily that people have left Apple to go to like a Samsung or Android for that matter, but I believe you're going to not have the excitement around upgrading. If you guys remember with Apple, you remember that back in the day the news cameras would take pictures and do videos of people like the lines. The new iPhone was coming out. It was a phenomenon because they had all of these things here, all these features, and people were standing outside, waiting 3 hours before the store opens. Just the excitement around the products. You do not see that now. That excitement is not there because it may not, your phone may not be the newest, but it's not a dramatic leap until the next one came out. So you're going to lose some of your advantages there when you're not having, especially when you go that long without having the market excited about one of your products. So don't think it's the end of the road for Apple here. I'm obviously still a holder of Apple. Spy as well. If you're in if you're in my group, even in the Patreon, you know that I'm a habitual believer in Spy as far as being a market indicator and also trading options. I love Spy, but Apple here, I have not seen a reason to get involved. Possibly just buying the overall stock and just kind of like holding that way. But as far as for trading or options, I have not seen a reason to get involved here because I don't see anything on the horizon here that's going to propel it to um, gain a lot of capital in a market that is heavily shifting toward AI. And we see a lot of the companies that are grabbing a lot of that liquidity that's coming into the market, investing in AI, and Apple hasn't done that profoundly profoundly yet. When you see the competition out there for the capital coming in, so for me, I definitely wouldn't be taking out any new positions in this. But again, maybe just to hold. But Apple, we got to do better. Tesla, here for example, I don't believe we've quite recovered from the whole Elon Trump debacle. Let's see here. One day, right now we're at 319.41. On the 1 day down 231, 5 day up 921, 1 month down 264, 6 months down 104.66, year to date down 59.87. We're up $70 year over year. Excuse me. On the 1 year we're up $70, around 28%. So here's the thing. I believe that obviously a lot of the news and policies coming out, going back and forth with the president, all of those things are going to have overall consequences. I don't believe that necessarily this is the end of the EVs and Elon's finished. Tesla is going to um, crash and burn. But I do think that we have to, especially for Elon, is we're definitely going to continue building. Obviously, Tesla, I believe he's doing a fantastic job, and I don't believe that the U.S. would have I don't say controllable stake, but I don't believe it'll be as popular as it is if it weren't for Elon. I think Elon adds the excitement factor behind electric vehicles. I think when you think of electric vehicles, you think of Tesla. You're not thinking about Toyota hybrids or Ford hybrids and all that kind of stuff. You think of Tesla when you think of Elon. So I do believe he's added that wow factor to the market. and that's benefited him greatly, and obviously stockholders as well. But overall, we haven't seen anything with Tesla price action that hasn't happened before. Tesla, a few years ago was a day trader's dream. It goes on these runs here to have these consolidation periods, but I know obviously with the fallout, this is people are like, oh my God, is this it? Is it going to be able to recover? Elon has been an innovator from day one. I wouldn't necessarily bet against him. Long term, obviously, something similar we were talking about, like with Apple, when we had that kind of like that handoff from Steve Jobs to Tim Cook. Um, don't know who Elon is going to hand off to. That may be a little premature in conversation, but that's going to be something that long-term holders, when that time comes, especially as he's building out his other ventures and his other companies. And I know sometimes people have been, saying, hey, you shouldn't be doing Doge. You should be focusing primarily on Tesla, and we get better returns. Or SpaceX, you shouldn't be doing that. You should be primarily focusing on Tesla, and we get better returns. And ultimately, Tesla has been the cash cow for a lot of his other ventures. So it's not wrong to say that, hey, focus on what's funding those other ventures, but he has other aspirations. So a lot of shareholders have been disgruntled because he has not been completely focused on Tesla. And I don't think he ever will. I think he has multiple passions, and like he said before, he couldn't choose between one or the other. So, and I believe he's in a similar situation now where he's not going to cut one for the other. I think he's going to focus on both. But ultimately, if you're looking at longevity for the company, possibly training up someone to replace him, then yeah, he would have to take a more passive role for Tesla, and ultimately kind of groom his successor in that regard. And I do believe that that would kind of ease investor sentiment and kind of pave the way for a longer term future for Tesla. But overall, short term micro, I believe that we're going to recover here. I've obviously adjusted my targets, especially for those of you that are in some of my groups. I've adjusted some of my targets for Tesla for this year. But I do believe that we will ultimately come back from this here. And I don't necessarily think that we're going to go much lower than where we are now. We've been, so right now we're at 319. Oh, excuse me, I'm looking at the 1 year. We peaked at around 479. And yeah, now if we can get Tesla, ideally, especially even get some options like kind of like back in like those April prices, that would be, I would be a buyer then. Obviously bullish on Tesla long term. But if you're talking about like swings, or trading, or just like kind of like a buy and hold or like a leap or something, I would definitely like to see it back in the twos, probably like the mid twos. I said mid to maybe like 280 range. But Tesla overall, again, this is not something we haven't seen. It's pretty much stabilized here for, let's see, yeah, the last month is only down like $2. The biggest thing was that decline in January here up until now, but we've recovered quite a bit of that, because we have a low of around 221, and it's already risen roughly a hundred bucks since the low here. So I don't necessarily believe that we're on one of those famous Tesla runs, but I do believe we'll see Tesla creeping back up over the course of the remainder of the year here. So, but ultimately, Tesla has made a lot of millionaires, has made a lot of people a lot of money. I'm not betting against Tesla, not against Elon. He has his track record is too impeccable for me to do something like that. So Tesla is definitely on my watch list, and I'm still going to hold my positions. I want to, let's see, July 17th, we definitely hit an all-time high. Another thing is that retail sales, we actually climbed around 0.6% in June. So what does this mean? It means that people are spending a little bit more money here. And obviously this is summer months, so it's not uncommon. We'll see overall here, especially as long as we have the stock market kind of running, people are seeing the wealth in there. Because one thing that we kind of that sends panic in the market is when you have things like high interest rates, mortgages going up, auto loans, credit card rates going up, and you couple that with a stagnant stock market or a stock market that's falling, that's a recipe for panic, right? So you can typically have one or the other, but not both. When you start layering things in multiple sectors, you're going to get that panic, and you're going to get that confusion there where you don't want to kind of couple these things and have things to the point where you are triggering fear and panic and even disbelief for some of the things that you're doing to try and address the market. So I think that's one of the things that is telling of where we are now in the markets. Crypto. I want to do a point here about crypto because crypto is doing absolutely phenomenal. Obviously, when you look at things like Bitcoin breaking 120K and going upward, those of you who have my targets for Bitcoin, you know that we still have a ways to go before we can hit those higher targets for Bitcoin. But I do believe that rising tides raises all boats, and I do believe that we're going to see spillover in the market. I believe that we're going to see the market overall raise for crypto, but we're also going to see a weaning process of some of those other assets. And this is something that we've been talking about since 2020. I made a few points back then for those of you who've been following me for a while that that crypto was going to compete with the stock market for returns. I believe that we're seeing that now. And B, we're going to see a weaning process, right? So back when the initial run up in retail was coming in, this is around like 2020, 2021, especially with like Doge and everything like running, you've seen a lot of these flash in the pan, these meme coins kind of popping up out of nowhere, these cash grabs, right? And that took a lot of money because people were, saying, "Hey, I missed the boat," because obviously get rich quick is better than get rich for sure for some reason. But that took a lot of capital and pulled it into these other assets that are disappearing, right? And you have these assets that are withstanding the test of time and they're going to grow because of that, right? So it's typically that longevity and their prices or the price, even price, I won't say stability because historically crypto has been very aggressive in its swings, but the longevity of these assets, they weren't respected, right? And now when you see consistently that these assets, yes, they have these corrections, but they come back and they come back stronger and better every time. When you're looking at some of these, as the market pushes forward, that longevity is going to be respected, and you're going to see a lot of capital flow into these assets. And we've seen this with institutions. They are aggressively, they see the writing on the wall. They are aggressively taking positions in these assets. So this is an opportunity that we've had because, like, if you've been buying, I say 2015 to now, like the last 10 years, you got in before institutions and now you're competing with institutions for positioning, right? Especially if you have a limited supply, like i.e. something like Bitcoin, right? You are competing with them for positions, right? So after these I'll say once we hit multiple six figures or it gets around like that million mark, you're going to be, for the most part, trading satoshis, right? So and it's going to be at that point you're going to see things where they're getting tied into 401ks and investment funds and in your VU account and in your BlackRock and all this kind of stuff. You're going to have that exposure there because it's going to be important that they keep up with the gains there. They want that exposure. You can see it. It's obvious what that they're pushing for with the ETF. So this is something that as retailers, and especially something on my channel that I believe heavily in, we have to be aware of and conscious of that. Hey, they want their exposure to these assets. They're looking to build and hold these positions here and ultimately, sell them back to you for profit, right? It's kind of like 401ks at jobs and stuff like it. And unless they do, matching, I'm not knocking it because sometimes it can work out. I mean, it's better than nothing, but for the most part, you can invest in a 401k or a VU account on your own without the management fees, right? You don't have to have the policy fee and the bookkeeping fee and the management fee and all these other fees that they put in there. to extract money that is already compounding that they pool together anyway, and they come back again and pretty much tax everyone individually. This is something that you can do on your own. So we're going to see that similar model, but in order to do that, they're obviously going to have controlling stakes in there because along with the stock market, which again, I'll say that for another video because I don't want to get into the conversation of the stock market being rigged and all that. But if you look into the assets here, and when you have a controlling stake, especially in something with a limited supply, as an institution, I can see why that would be valuable. It would be valuable to have a controlling stake in an asset with limited supply, so that you can influence price action, right? So if you need assets, or if you are having a bad year in another sector, you control the assets here. You can go out and use some of that free cash, purchase some more, drive prices up. You control a lot of it. Prices, it's a lot of reasons that you're going to see institutions get involved in this here. And I believe that you're going to see it become kind of more of like a household name. I know it's been popular inside of our sector, but if you're not in, you have to realize that the majority of the world, let alone the United States, is not invested in crypto, and it's headed that way. Whether you want to be or not, you're going to see it start popping up in your fund, and you're going to be invested in crypto just by putting money in there. A portion of that is going to be inside of your index, right? So we're looking at these assets. It's one of the things that we have to kind of keep going. I do believe I'm heavily in staying invested in crypto. I'm not even like at smaller percentage levels. I do believe investing in crypto. I still have my Doge, my Bitcoin, my Ethereum positions here. I like having the stable coins, not stable coins, excuse me. I like having the staple coins like Bitcoin, Ethereum, because if you're looking at, similar to what I said earlier, if you think about Tesla, what do you think about? Or think about EVs, you think about Tesla. When you think about crypto, Bitcoin is what comes to mind, right? It's the it's what Coca-Cola is to soda, right? If you say soda, most people are going to say Coke, right? And that's what Bitcoin has. It has that top of the mind awareness. It has that dominance there, and it's going to be a stable factor to come. I don't think anyone's going to dethrone that. And I think that if we are looking for a position here to hold longevity wise, then obviously Bitcoin needs to be in there. Ethereum as well. I think Ethereum is going to do absolutely well. It's been number two for a while, but you're seeing that spillover there. It's been that go-to when Bitcoin runs. You see that Ethereum runs with it. You can do the charts here. Look at some of my older videos. The charts kind of align, especially as Bitcoin progresses and goes higher into the six-figure range, ultimately into the sevens, and you have that law of diminishing returns when it takes huge amounts of capital to move the asset, and it takes huge amounts of capital to get a return, because it's not as easy as it is for Bitcoin to go from 20,000 to 40,000 to get 100% return, versus if it was to go from 500,000 to a million. That's going to take a tremendous amount of capital to do that. So you're going to have that spillover into some of those cheaper assets, and things that I believe that are tied to markets and the retailer sentiment. So that's one of the things where if you're looking at like XRP, Ethereum, and even when you're looking at some of the things that can build out, when you say, especially speaking of Elon, like if you can add utility to some of these coins here that are meant to be used as like a token. It's one of the things I was talking about like earlier with Doge, was if you have some of these things and it can be used as because I believe Elon will be the one to do it, which is be able to do like that live mass testing, basically, of a cryptocurrency being used as an actual currency on a platform like X. I believe that one of the cryptos that will be used will obviously be Doge. He's been a huge fan of it. And I think that that will kind of be a test ultimately to see how people are going to interact with it, being able to hold things in wallet, because obviously I don't believe most people have their cryptos in wallets. They typically held them on the platforms. I've been a huge advocate for moving your crypto off for a long time, and it's going to be like one of these transitional methods or transitional moments for crypto alike so that we can move the market forward, and ultimately these coins are going to settle into their prospective places, right? I did a video, let's say maybe like 3 or 4 years ago, and I was saying that there's room for multiple cryptos because they're going to serve different functions, right? Because a lot of times people like Bitcoin maxis or whatever, they'll say, hey, it's Bitcoin or nothing. And gains wise, I get it. Nothing's necessarily going to compete with some of those, especially if you got in at a cheaper rate where it's going to go. Like if you're one of those guys that got Bitcoin at $500 or $1,000 and it's in six figures now, I get it, right? But I'm not saying that it's either or, but what I'm saying is that these coins can have their prospective places, right? And I use the analogy of credit cards, right? They can do the same things, but they're going to serve kind of like different people and different functions, right? Because it's not like one credit card processing company. You have like MasterCard, Visa, American Express, Discover. They have different functions. They target, depending on the company, they target different types of people, but they all do similar things. And I think that we're going to have the similar breakdown of that in the stock market. I mean, excuse me, the crypto market. I think that we're going to have a similar breakdown of those things that we can um, see a weaning of the coins that don't matter and see a elevation of the coins that do, especially as they find their niche in the market. So with that, that's going to be my market update for this episode of Anomalous Investor. Let me know your thoughts in the comment section. It's great to be back, y'all. I appreciate all of you. Like, subscribe to the channel, and I will see you guys in the next episode.